afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we saw a big reversal at some key levels for the NASDAQ, Justin.
Yeah, we'll definitely get into that today, but we'll also talk about some stocks, too, that looked interesting, including Lanthius and Acadia Healthcare, and finally, Vera Mobility, and some stories that we had on those today.
Exactly, that we will. And also the action for leading or potentially leading stocks today maybe just tells us a bit more about the kind of market that we're in.
Absolutely.
So we'll get to that. But first, let's take a look at the major indexes. So the NASDAQ today finishing down by 0.8%. Same for the S&P 500. The Dow down 0.7%, and the Russell 2000 hit by about 0.5%. So we've been talking about this 50-day line and the 10-week line on the weekly chart, that being a big hurdle that we really want to see the NASDAQ get above and stay above. And it was not able to do that today.
Yeah, and we were talking on IBD Live today how we were kind of referring to Mike Webster and how much he would complain about Monday morning gap ups, and that's exactly what we got. Things were looking great. Index, the NASDAQ composite was up 1.54% at its peak, and then I think the catalyst might have been when Apple came out saying that they were going to be slowing their hiring, slowing their spending for 2023, and it just kind of maybe made this whole recessionary fears a little bit more real, and the indexes just really seem to kind of fall steadily from there. But getting back to the daily, you've got two things right now. You've got that 50-day moving average line that seems to be persistent resistance. And now you've kind of got this, 11,650 level right around there that the index keeps on bumping its head up against and getting knocked away. So you've got kind of two areas of resistance kind of merging together within, a few tens of points. And that's just kind of making it hard to get too excited about any rally, because it immediately hits this resistance. And let's say it does cross this resistance, well, then you've got 12,000 that you're looking at, 12,320 that you're looking at. You've got all of these hurdles that this market is going to have to kind of get above. But remember, we also have to take a look at the individual stocks, and so there was definitely there's been a lot of sector movement lately. Some of the sectors that were, doing well for most of the year kind of got the rug pulled out from under them, and now some of those are coming back. I'm talking about energy, oil and gas, some of those. Meanwhile, medical seems like that's where a lot of the setups have been, and some of those were faltering today.
Exactly. And now let's take a quick look at the S&P 500 as well here. So a downside reversal hasn't even quite come to those highs in early July and late June. Maybe, can connect the highs here a little bit. But at any rate, we're still below that 50-day line on the daily, and clear resistance here at the 10-week line on the weekly chart.
Yeah, I mean, the S&P 500 can't even get to the 50-day. So the NASDAQ has really been the leader for a while. Now, some of that leading strength has come actually from some of the worst stocks, some of the bottom fishing, some of the stocks that were beaten down the most. So it's a little tough, again, to get super excited about that. But yeah, as you mentioned, the S&P 500 is also hitting resistance. The Dow Jones Industrial Average, that got up to its 50-day moving average line, got turned away. And then the Russell 2000, we often use IWM to kind of gauge what's going on there. And that also hit the 50-day moving average line. So you've kind of at least got consistency across the board with the indexes. And all of them are basically saying, hey, we're just not quite ready yet.
Well, Justin, I know a question that we might get asked is, hey, well, in previous scenarios where we've seen resistance at the declining 50-day line after a weak rally, you guys have called this a shorting opportunity. Well, what about now, as we've come so far off highs and we're starting to see some signs of a bottom, not necessarily a roaring rally, where it's just a choppy kind of area. I know, Justin, you've recently said it's hard to make big bets either way. in this kind of environment.
Yeah, it's exactly as you said. I mean, if you just kind of look at what's going on with the indexes, they're kind of hitting those resistance levels, and again, a lot of them are kind of hitting the same resistance levels, but then falling, over the period of maybe 4 days, and then getting support. And so when you're kind of having, less than a week in which you're having these turns back and forth, it makes it really hard to go either way, because if you go long when things are kind of looking interesting and you only have 4 days in order to make progress, that's not very much. So this is one of the reasons why we've been focused a little bit more on the shorter term trading, more swing trades, and really remaining light, because when it gets choppy like this, it's so easy to start doing more buying when things are looking good, as they get to those highs and maybe even break above them. But then a lot of times we're seeing a lot of disappointment afterwards. And that same thing is happening on the short side. You start looking at, oh, wow, we're getting a reversal here at these levels, and it only lasts a few days before you're turning and going right back up again. But, since you mentioned it, a couple areas that we were looking at, I mean, pull up SMH, that looked like it was kind of coming up to an area of resistance and getting turned away. Now, of course, now, of course, you do have this chip spending bill, a $52 billion bill that's out there, that that could be a catalyst for something to happen one way or another. So there's that. You also have XHB, the home builders. That's another group that's been looking kind of like it could potentially take another leg down. But you've got some housing data coming out. So on top of all of that, you've got earnings season coming here. So we're going to be seeing a lot of earnings reports. That could be a catalyst one way or the other. And again, until we get a little bit more clarity, to me, it just makes it a little hard to go really heavy either way.
Yeah. And you mentioned energy. So just really briefly here, XLE getting a bump today, up 2.25%. Oil up over 4% today, and natural USO is a rough proxy for that. UNG here, natural gas ETF up 4.5%. So what do we make of this? I thought commodities were dead.
Well, yeah, so did a lot of people, right? And then, here we have all this support at the 200-day moving average line. But okay, so now what do? Now you're at the 50-day moving average line. You're kind of in this no man's land. You could easily see some of these commodities take another leg down. Again, it's there was a lot of strength off the bottom, but was this kind of a quick rally that is then something you can short? There's just a lot of uncertainty here.
Yeah. There really is. Okay, and let's take a look at the 10-year Treasury yield here, because we're keeping tabs on it. It's right around that 3% level.
Right around that 3%, and wouldn't you know it, there's that 50-day moving average line rearing its head again, this time again getting some resistance at that level for the 10-year Treasury yield. Now again, it's hard to think that the 10-year Treasury yield would go by technical action, and moving averages, but here we are, and it just seems like for as much as there is that pressure coming from the Fed in terms of their raising of rates, there's also sometimes this flight to safety and bond buying that's happening, which is also putting pressure to lower the yield. So you've got these conflicting forces, and you can see that there's been kind of a little bit more back and forth there, and not necessarily doing what you would expect. And a lot of people are looking at what happens with the 10-year Treasury to kind of influence some of these higher valuation stocks too.
Absolutely. And you mentioned healthcare being a recent area of strength, but a lot of reversals in the group today, Justin. XLV, so the broader sector, taking a hit of more than 2% today. Within that, we have Lanthius closing down 5.4% today.
Yeah, and we were talking about this on IBD Live too. Scott St. Clair was talking about a position that he had in this. We actually put this on leaderboard. We had it on the watch list for a long time, because if you kind of take that step back to the weekly chart, this had such a strong move in that week, and you kind of like to see it hold the gains. Well, this just kept on going, and so we finally got a 6-week cut base here in Lanthius, a little bit of a break. And for leaderboard, what we were looking at is that kind of hugging of the 50-day moving average line. Once we kind of saw a pop there, that's where we made an entry. And last week's action looked really good, very strong. But then here again today, we saw reversals. Now, there's an interesting story here, and Matt Galgani had a story that was on the homepage today that I saw, really kind of piqued my attention because of some of the things that they're doing with diagnostic imaging, artificial intelligence used for diagnosis, and they're getting really efficient and accurate and consistent with using that artificial intelligence. They're doing some really interesting things with coronary artery disease, and which is again a big thing for people with heart issues, also prostate cancer. So it's worth looking into the company. There's a lot of interesting things going on, but it's also one of those things where you're seeing this extra volatility, and so you have to kind of really choose your entry well, and that's why we've been kind of focused a little bit more on the pullbacks. So you see that July 8th entry was kind of not waiting for it to get all the way back up to highs, because we have seen a lot of breakout failures. But what would I like to see here? Maybe again a little bit of sideways action, and then another try at crossing resistance.
All right, we'll see if it can make that happen. And next on our list, let's take a look at ACHC, Acadia Healthcare. This one also reversing a little bit lower today, down about 1.4%. Has earnings coming up in a week and a half, but tried to break out today. Looking at the weekly chart, this is a stock with an RS line blue dot, so good to see it holding up in a weak market. But again, to stick your neck out there and buy breakouts right now is not for the faint of heart.
Yeah, it's a common story where, I bought a breakout and had to sell it within a few days because it just didn't work out. Now, just because you have something break out, and let's say you bought it at the highs today and it was looking good, and you were seeing it pop off on an alert, or maybe you got something off of MarketSmith on it. Just because it closes down for the day doesn't mean it's necessarily over and done with.
Absolutely.
But you have to be looking at that scenario. It's a reminder of how important risk management is. You have to have that exit strategy in place. And look, I thought it looked good. It had that little break right before it crossed the resistance, kind of consolidated gains a little bit. There's nothing I can find fault with here, but we are in an environment where breakouts aren't necessarily going to work. You can have the best looking pattern and just recognize that in bear markets, in corrections, the likelihood of success goes way down. So it's just the environment that we're in. And it's important to kind of keep your eye on these, though, because when breakouts do start working, that could be an indicator that maybe we've turned. So we're still watching a lot of these higher relative strength stocks. You mentioned the relative strength line. That's at new highs, and that's the kind of stock we want to see holding up well in a bear market. It's impressive how this stock is above its 10-week moving average line. It's above its 40-week moving average line when the indexes are so far away from that. So when the market does turn, you can think of some of these stocks that are already up near new highs as being poised to really have phenomenal moves once that pressure of the market is off.
Great points there, Justin. Let's wrap things up with a look at VRRM, Vera Mobility. And unlike the other two stocks we looked at, this one did close positive for today, although off its highs, but still up 2.4%. Strong volume behind the move. Tried to break out of a cup with handle here, but let's see. I don't know if this is exactly updated for the time, but closing range, it doesn't look like it. The true range may have been a little bit stronger, but it did back off by the end of the day.
Yeah, that definitely backed off considerably by the end of the day. But as you mentioned, it was still up 2.36%. That's nothing to sneeze at. So pretty impressive there. Now, here again, it's not necessarily that you have earnings coming right up, but it does have an investor day tomorrow. So I think a lot of investors are going to be looking at that. There is kind of this activist investor out there, Scopia Capital, that's saying, Vera Mobility should be considering a sale, a leverage buyout, or a breakup of into parts to unlock the value. And you look at what this stock has done, and it's just gone sideways. And I think that's what's frustrating Scopia Capital, is that they're seeing a lot of value in what they do. They help manage fleets. So fleet operators like Avis car rental and Hertz car rental might use them to kind of help manage their car rental fleets, or even municipal places like cities, counties, school districts might use them for tolls, violations, ticket violations, and things like that. So it's got an interesting product out there. But with all this sideways action, Scopia Capital is saying, hey, at your investor day, you better show us what your plan is to unlock this value, or we think you should consider some alternatives. So that'll be something that investors are looking at tomorrow.
Yes,
so
absolutely.
just like an earnings report, you kind of have this binary event that could shake things one way or the other.
And I'm going to do the Justin and David Ryan draw the line here. It's not exact, but it does touch on a lot of points. It did poke its head above this line earlier on in the year, but it does seem like it's coming up on some relatively significant resistance here. So tomorrow, that could be telling to see how it reacts to this investor day.
It could be, or it could just be another one of those hitting the line and kind of
nothing burger. No.
Yeah, exactly. So that's why it's hard to predict these things, right? So sometimes it's better to wait and let the market tell you, because also what happens sometimes is there's the news and then there's the reaction to the news, and sometimes that reaction is a lot more indicative of which way the stock is going as opposed to what the news itself was.
Very, very true. All right. Well, we'll continue to take things one day at a time, Justin. Appreciate your analysis today. And for everyone for tuning in, we will be back with more tomorrow morning on IBD Live, hosted by David Chung, and our special guest, David Ryan, will be returning to the show. So we hope you join us, investors.com/IBD Live, for all the details. We will see you there, and we'll also see you right back here tomorrow after the close.